Hi, Francis. Welcome back to F.A.C.E.
Very well, Dale. Thank you for the invite back. Delighted to be back with you.
It's great to have you back. I don't invite people back unless I really believe that they have, skills and ideas to share. And, I've seen you on Twitter for years, but the presentation was great last time. So I'm very interested in what's on your radar now as we stare down at record highs in the market, and we're getting some pretty good action in the gold market. And you can share your screen with that green button there, Francis.
Let me do that right away. Yes, okay. Thank you. Delighted to be back with you, and I'm actually fizzing with ideas at the moment, particularly in the traditional markets, which is my phrase for all things FX, indices, commodities, and a variety of other things. Let me get the first kickoff chart in play. It's almost, I don't know what you most want to hear about. I've got so much to tell you, and I know how much time have we got, Dale, so that I pace accordingly.
Another, say, 27 minutes.
Great. I'm going to go fast so that we can jam value in for your community. And that's the game. Real trade ideas that have decent to high probability of occurring with expansive rewards and tight risk. That's the game that I like to play. Welcome, everybody. I've started off actually on silver. I typically say gold is the God market. So maybe I'll just do a short pivot to gold, and I'm going to maybe just switch off the eye. There's a lot of lines on there that's confusing. We're encouraged by metals, and you mentioned metals in your opening take. We're encouraged by metals, and we actually think that people have become so docile and cried wolf so many times now on resurgence of metals that they're actually going to possibly be surprised by what happens this time. So there can be people can be a little bit jaded. I think it was August last year, and in fact, let's just get that date spike right for the high. Yes, August last year. And you're more than a year and a number of months. People just think it's the thing that's not happening anymore. We see a strong move. I'll just slowly introduce some of the
lines. Who needs metals when you have crypto? They're more portable. The millennium trade is crypto. And let me ask you this, Francis, do you think that the money flow into crypto has dampened the bullish behavior in metals, that money flow being siphoned into crypto instead of gold and silver?
I think you mentioned a generation. I think there's that's very generational, almost certainly. There's of the older generation that won't hear about cryptos, and there's of the young generation that's sort of in the okay boomer category. If you mention gold and silver, I like to bridge both. But I think you can't have a new category and I call this larger category the anti-fiat, because we're going to pivot to FX in a bit as well. I've got some very interesting thoughts on that that I think will generate great trade ideas for your community. But I think the anti-fiat, which is where dollar is the king, it's the anti-fiat group, by being expanded by this new category, has got to have seen flow into that market cap that would have otherwise gone into the traditional gold silver. So for the gold and silver people to say it's had zero effect, I would see as a little bit foolhardy. But that doesn't mean that crypto is going to entirely eat the legacy metals dinner. And I'll remind people that it's tangible. You can hold it, you can stack it, you can have it in your grubby little mitts. And in this world where everything is tracked and traced, the blockchain is, in my essence, unless you're in privacy tokens, open source banking, because someone can have your wallet address and check how much money is going in there. There's certainly still some fallibility and things value to be had in that which you can touch. So I'm in the never mind the fastest horse, have a stable of horses, because even fast horses go lame sometimes and are the wrong tool. Yeah. So that's my soundbite for that.
Love it.
Let's go to silver because it's the higher beta. So this is recovery. I was going to just highlight on gold that actually you're in a broadening. These red and the pink line is a macro broadening out, which is typical of thrashing around after you've made a high and then squaring up. You might note that the big fat blue line along the bottom, which I can just demark again a couple of times, have been a hard floor. That is at the
flash
60 to
crash.
80.
That was a weird candle too, wasn't it?
Yes, indeed. It was a weird candle, and it got tested a couple times. We actually had a double bottom on that one that reversed for the next move up. That again tested here and sold off. Then you had the flash crash. That was a significant date for many of the conspiracy theorists on gold and plunge protection and various other reasons. But we are now approaching this zone again. And typically the price overall price structure has been what we call squaring up. So it's becoming more horizontalized, while previously it had this downward descent, if that makes essence. So the corrective period I think is over, and this is a squaring up. But let's go into the one that's a little sexier still, and held up a little bit better during that gold down arrow that I was highlighting, and that was the silver. And we'll show you the draws that we've got for you there. It's a little bit busy, so I'll just take the eye off first for everyone to recognize the chart before I scribble all over it. What structures we've been noticing are the following, the key events, and I'll draw them on overlay first, and then I'll let the eye come back on. That was, in essence, a falling wedge. We look for the 3 impulse. We put a splitter in our wedges because you get these defining half moves that occur, and you get this big bloated move that had the capitulation down, and you get a third and final. And in essence, this is when we expect to break out of the wedge, and that started to happen, the falling wedge. Overlaid on that, on a smaller time frame.
Could we get one more pullback to test the wedge line breakout?
It looks from the previous draw that I put up that you've already had a little bit of what I'd categorize as a return move, which I think is the question you're asking.
Yeah.
In other words, that
it didn't quite get down
sufficient.
there.
That doesn't mean you don't come off again, but I'd already be thinking we're staircasing on higher lows now, where that is your last low, and that this is potentially...
I'm just talking my book because I didn't buy it the day of the Fed. All
That's
right,
okay.
Francis, so I'm hoping
you get another chance.
Yeah.
Yes. No, I understand that sentiment. I'm going to drop you down.
Have you ever felt like
recent...
that? You know, you're waiting. You don't act on the day, and then 2 days later, it's gotten away from you.
Well, it's typical of the metals market. It anesthetizes you into inactivity because it's been a lengthy, dull period. And you eventually become too assumptive of the ongoing nature of that. And then you get caught with your pants down. And this happens, I think, to all of us to varying degrees at moments in our trading. What I was just highlighting here with all these funny little draws that are coming to the end of this wedge is that there was a real buy base in this green box over here.
Yeah.
And then you had a reversal. So I'm going to take you down out of the daily into a lower time frame just to highlight that reversal a little bit. That is a classic inverted head and shoulder reversal there. So that's which I'm moving around being your left shoulder, that being your head, which was almost a final capitulation, which is very typical, and this being your right. And you can see I show you where the interactions on the neckline were. You see the 4 crosses. First, when you break it. So I'll just choose another color so that makes sure everyone can see what I'm drawing. First, when you break it, then when you revisit it, then when coming up from under, you make it on a wick, which you did, and then when you trigger. So there's the first reversal, which performed 2 targets and another key round number at 24.75, and therefore you got the shooting star, which is tied in with that contact point I've given you, and there's your pullback that you missed, Dale. And it came all the way back, surprise, surprise, neckline at the $23, almost revisit, bit of a hammer, and you're back, you're heading back up again. Now, you are already in another, I'm going to drop a time frame so that this is evident, but these funny red draws are, again, another structure of reversal that's happening at a higher place, which has upside targets. And before I leave this time frame entirely, I want to highlight that you are also, I refer to this as nestled head and shoulders, in this case, inverted head and shoulders. And we actually have a lexicon that we've had to develop for HVF method, because there's many things in technical analysis that are not suitably defined to my satisfaction. So we've created our own language for it. But we refer to this very first one, the small one, this nestled one that I was just moving around the right shoulder on, as the monarch. In other words, it's at the top of the castle if it's a head and shoulder. It's the first sign on the smallest one, and then the others are bigger and incorporate it. So in essence, this big line here is a larger macro head, where this over here, this structure over here is a left shoulder. And of course, we've kissed the same 24.70, just short of the $25, which is an interesting level. And then had the pullback again, where
the term monarch, because that formation is king.
It basically is the first at the highest point, yes, or the lowest if you're an inversion. So it's the top dog. Yeah, it's the top dog, and it's the smallest time frame. And it is the initial cascade that generates many of the other larger families. The top of the pyramid, where you get these broader shoulders, keep occurring as you head your way down after going staircasing up. So that's the phraseology we chose for that. And by the way, we'll show you some targets on that for the guys that are wondering. So what does that mean? What does that mean? Where we're going? Very interestingly, Dale, if you've been following silver, you'll know that the 28 has bedeviled us quite a lot as a level. So I'll just go back out for people with shorter memories, or who don't have this visual chart in their mindset. 28. So if we highlight, and I have that as a key level of significance, by the way, that fat blue line. So it stays on there. And by the way, even further, just for the relevance of that fat blue line, right the way back to the last peak. So everybody gets it. The base of that descending triangle, the key round number, that was the blow off and the end of the bull move many years ago. So we've been struggling to hold above that. So taking you back down, just so that, just like people to know where we are.
Great telescopic view there, Francis.
That's it. That's it. The people geolocated so that they know.
I love when my guests break out the telescope, and really gives because everyone's using a microscope, right, Francis?
Well, you are spot on with your philosophy. The money's made in the sitting, Dale, on the big time frames. Get the big time frames right technically, and it's just so much easier to be successful trading. And you basically saying that very wisely there, and I 100% endorse that. I look at big time frame charts. If you have plenty more time, because things unfold slower, you are more prone to not make a silly impulsive move, and you get the major move right. You get forgiven a lot of errors on the way up. Get the major move wrong, it doesn't matter what you're seeing on a 15-minute time frame, you get much higher failure if you're trading against the macro. And I think that's what you're saying, and I 100% support that.
Yeah, just to be facetious, I enter on a tick chart and manage it from a monthly.
That's it. Right. Keep moving that stop down. Give it more chance, give it more room. Let it run.
Cancel if close, I call those.
Yeah. So the fascination with that is that I think you get challenged again at the 28 and you will rest again. But this green risk reward that we're showing, taking you once again back into the shorter time frame, because we're manufacturing a trade for our premium community as well. That was coinciding with the non-farm payrolls actually that we were doing. And I was explaining how guys could break into this trade on the smaller fractal, which which is again, we think reversing an inner cycle of higher highs, higher lows. And if I show you that smaller fractal that was bringing you into non-farm, maybe drop to the 2 hour, you can see what we've been looking. I'm drawing lots of reversal patterns on the chart now, and that's interesting on the various time frames. So this is one I would say certainly to watch. And even again, inside this particular correction here and there, you have our own mini monarch for the smaller move in here. So that was a left shoulder, that was a spike head, and that was a right shoulder that's already performed. So people are saying, well, we're looking a little bit benign now. Well, you've just done a target. You could pull back to here for all intents and purposes. In fact, in your case, you would probably be hoping so that you can get your trade on. And we were putting the guys in long here, and we were putting stops just below the right shoulder. So that's why the red zone is here and where the entry is. And you'll see we're always interested in max reward for risk. And you would be sitting with this trade. It's not going to be at 28 in a flick of a switch. But if I just take you back up so that you can once again see the big picture, that is the trade idea, taking you through the 28 level to those purple targets. In fact, I'm probably a bit short there. over there. And in terms
Do
of
you think that
RRR,
this move in silver, say, let's push it out, and a lot of these scenarios, all these head and shoulders formations end up manifesting, and we get to 28 and then we get to 38. Is your view that the gold silver ratio will continue to contract and head lower during this time frame? Because up until about, I don't know, 2 weeks ago, there was a little bit of a correction in the gold silver ratio, but it looks like that's terminated to me. Do you have a view on that?
yes, indeed. In fact, you're finishing my sentences, but you're taking me to the next place we were going to go,
Okay.
which is a very watched benchmark for me. And this is the gold silver ratio. And you're absolutely spot on, as if we're talking metal trades, that this should be observed. We've been waiting, and I've been moving these lines. So I've not just nailed it now. I thought this would happen earlier. And in fact, when we drew a channel, I was expecting it to break out the bottom, and in fact, it went out the top.
Yeah.
It formed a broadening structure, and then formed a mini head and shoulder in here. So I'll just drop again over here and highlight that. Again, target made on the downside. That was a surge now for silver relative to gold. And this is a broadening. We call it a megaphone broaden on a bear pole, which we tend to see expect continuation from the downside. So the main direction in this time frame under review for which this megaphone exists is actually an ascent again. So it's almost like a flag. It just has a broadening structure in it. And you get a final capitulant pump that was taken all the way back down. And that break is significant for us of this, what we call this basing ascending grind line to the megaphone. So overall, we're seeing this revert downside. And we think this trumpet, this larger that we've drawn up here, that was broadening and going up, but thrashing more wildly, which is invariably discomfort with level. So when you start to thrash more, as you as an experienced trader will attest, the increase in volatility, they often don't say markets are going down. If you're listening to the Squawk Boys on CNBC, they're saying it's getting volatile out there. Well, it's usually the beginning of that process for a good smackdown to the downside.
One of our attendees, Francis, is asking if you use fibs on your chart.
We do use Fibonacci as an analysis tool. I use it in a very specific. Way. So the answer is yes, but not necessarily as every traditional technician would.
Okay.
So that's the answer. I'm very wary of your time, and I want to squeeze in so much value. So I'm going to leave precious metals there, and I'm going to tell you that we are calling weakness on the euro. So guys that want to be, we do a reasonable amount of free view. They can also see our YouTube channel. We're calling weakness on the euro. As a predominant American market, I'm certainly going to start with the big D as the other half of that. And we can have a look at this draw. We talk about complexity in head and shoulders, and this is also an M top. So it's almost like a double top as a head in a head and shoulder. And we are expecting reversal. Note you get your return move. It's very good to have these things. It's validation. It's not a problem. So there was the final right shoulder for us. Now, the best trade actually in terms of this doesn't involve the dollar. I think dollar's going to come on strong a little later. I think the taper talk might come a little bit early. It's time for Fed to get a bit of credibility back on that inflation narrative. So they might do something shock. I don't think yet. I think the Swiss franc is the biggest winner in this. Everyone will know that it's essentially landlocked to the euro mass zone. Is of the fiats, admittedly an ugly bunch, probably a semi-credible fiat currency, and not with.
So do you have like a 110 objective here off this formation in euro?
Yes. So just for the euro dollar trade, I am setting you up for a better one, by the way. But,
okay.
I still think this is a worthwhile one. Had you taken it only at that neckline break, I would have taken early. But had you taken with a stop at the shoulder, you would be already down for this target for around a risk-reward ratio of 3. That doesn't tend to excite me particularly. So we optimize and we entered early, and I'll show you on the Euro Swiss franc, which is our chosen trade that Euro I entered on. But I'm just laying a foundation and marking it to dollar for our US audience as well there, so that guys can also position. Some of them may have European interests and might want to look after that. This is our Swiss franc call. And I think the Swiss franc is the main beneficiary to start. As I mentioned, dollar to finish hard coming. And that is coming because we also long the dollar against the yen. I heard the previous speaker, very interesting. Nice to hear Blake Morrow's comments there. But this is the RRR I'll get on this trade, and it's far more sexy for me. It's around 110. Which actually would be a new record. We have done triple digits once or twice. It doesn't happen every day. So we're famous for calling the Euro Swiss franc. I was London based during that time. We called the short on a similar structure here, and the Swiss bank was already engaged. So many people say technical analysis doesn't work because the central bankers will just come in. They are just a big participant. And they were already engaged at this point. Not only was that target made, we had huge overperformance. You would have exited there. So I've drawn what we refer to as our overperformance slides. And that was your exit. Then they went to what some people refer to as peg, but I refer to as a floor because there was no upside distribution. And that was the big drama where Draghi said he'll do whatever it takes. And the Swiss, 3 weeks after saying the floor was central to their plan at 1.2, walked. And then a whole bunch of brokers, actually, one went bankrupt, Alpari, some of the names you might know, F.A.C.E had to recapitalize. I mean, they were washed by this trade. Those were 2 short calls we had made that we were actively engaged on this. And we're now coming for number 3. I'm going to point out a couple
Francis, I've heard that a lot of brokers are raising margins on the Swiss right now. So they're a little bit concerned about maybe peg failure 2.0.
I think that's a classic sign of flushing retail out of the best trade by requiring them to put bigger margins. I can guarantee you, if you're on a big desk in a JP Morgan, you're not got any problems getting your short Swiss franc on. But the retail guys will be crowded out of the best parties. Get them on early, guys. They may still up and force you to trim size, but they may stop you from putting on the trade at all. So in extreme circumstances, they have stopped short sellers from putting shorts on. So it's like retail man bad, good for us. This is the structure that I've technically drawn for everybody here who's following. That essentially, this was I put a box in here and say this was the intervention crew. This is what effectively they did on something that needed to fall and correct. They put a box in there. And you ended up getting the outcome anyway. They could have let it all happen. So I've drawn this red line that's in thin red to show what might have happened had they not intervened. But essentially, you would have probably got the final low in the end anyway. They might have postponed it for a while at great cost to the Swiss citizenry, who had to stack a much lower worth currency at the expense of giving up on a good one. And this is a continuation pattern trade for us that we've been talking about quite a bit in essence. And it's flat bottomed, it's hanging heavy. It's actually not too complex. You see I've drawn channel lines around this up leg. You have a small amount of meander within that. Since then, you're in the top room, then you're in the bottom room, but it's actually not very complex and it tightens. The channel's getting tighter. That shows the lowering volatility. That means real rest and comfort with this price behavior, staircasing down into a very tight channel swing up here. So in our worldview, the euro is compromised and is about to be exposed again. And if you aren't in early, you probably won't get in at all. And even if you are in early, they may up margins on you and you may have to reduce your sizes. So get them on quick.
Here's a comment from one of our attendees, Francis. Don't remember seeing this guy before. Must have missed him. Awesome stuff.
That's very kind. Thank you to the gentleman. All the best.
I second that.
That's great news. Thank you, guys. Appreciate it. Always want to give value to people, real trade ideas with real R's for you to make. And that's the game at the end of the day. If you're making R's and you're only spending them when you're wrong, one at a time, it's the winning way to the game. By the way, going back to the macro on dollar, just to take you out, because I think the Swiss franc steals the headlines for a bit. I'm very concerned about the Asian currencies as well. That looks like a little flag for me on the USD JPY. We're seeing this also as a big continuation pattern for upside against the JPY. And probably my rainmaker $1 million trade, if you want to call it. We all have a Ferrari trade. We shouldn't have, but we think of that will be a real, and it's a super macro. The bigger the patterns, the bigger the gain. And it's already faked me in once and I had to get out and eat red. This is the USD Korean one. We're known for calling this one. I'm going to put copyright on this trade as far as anyone can. The Asian crisis was very well signaled by the squeeze over here on the Korean won. I don't know what it is about Korea. I think all the Asian currencies are going to come in for problems, but this was an unbelievable super overperformance. That was target. This was all macro overperformance in Korea. Then you had what's the structure now, falling wedge into that. You got the crisis of 08, 09, which was, of course, the property related GFC. You got the huge run into dollar there, and then you've come back down. We are squeezing. We love this structure. Now, it did a little cheat on us. You remember the dollar initially got strong on the pandemic events, but then was the highest printing currency, and this was stamped on. And the dollar printed not only for their own needs, but I suspect for many offshore nations' needs for dollars. Which is part of the Triffin dilemma of being the world currency of denomination. But this fella is one we will see. It's not ready yet. It's not ready yet, but I've got alerts. I've got tripwires all around this thing. In the next 3 to 6, 9 months, I could see this working its way back towards here. If it triggers, it would run away. You won't even be able to get into the trade. Chasing a move like that, never mind one like this, where actually most of this is gap, is going to be absolutely unfeasible. If you're not in early, you've missed the bus. This is a super one. And by the way, it's 2,100. So we're talking about nigh on 50% on an FX, which I think some of you won't need to make the case any harder than that to appreciate the scale of that. Never mind that previously you got over performance to that, and you'll be paid to close your trade, and you'll be the only one being a buyer in an absolute panic nightmare scenario. So there's skippy stuff coming for world economies, without a doubt in my mind. And some of it could be taper tantrum and a rush into the dollar and a shortage of dollars. That could cause real...
We got one question about like your euro, when you're talking euro Swiss. Do you know fundamentally why the Swiss is going to strengthen? Do you have an answer for that?
Well, I think it's going to be as much about the euro weakening and Europeans generally, Germans, Italians, not altogether comfortable with dollar. They will have some dollars, they'll move some into dollars, but they'll prefer. Traditionally,
Swiss.
Old families of wealth have Swiss bank accounts. It's kind of like American folk might have a Delaware offshore corporation rather than go to Marshall Islands. It's close as comfort. They can drive there in a day. I would suspect it's Europeans dumping euros for their high quality local friend. More than that. So of course, it's being an FX, it's a two-way swing. So by selling the euro, they're doing damage to the euro, and of course they're bidding up the Swissy when they do that. By the way,
thank you, Francis.
The insiders are very dominant in that space. Hildebrand, who was the SNB head on the last crash, wife had an FX trading account and was caught shorting the euro Swiss franc. If you believe it was his wife that was actually the trader, then I've got a bridge to sell you somewhere in nearby San Francisco. But so these guys, it might not just be corporations, it could be insiders all over the place.
Well, look at our Fed, what just came out from our Fed here in the US. So nothing surprises me anymore, Francis. There's so much manipulation and insider baseball going on that made Gordon Gekko look like a choir boy. Who was Ivan Boesky, or any of those old guys, Michael Milken. They were choir boys compared to what's going on now. So the best way for people to follow your top tier work, buddy, and follow you, get involved with you.
TheMarketSniper.com is our website. We run a premium community where we discuss trades like that. I'm going to leave you with four gifts. Also follow the YouTube channel under, if you're interested in crypto, the Crypto Sniper. If you're a traditional market man, FX and equities, the Market Sniper, just the single S. And the website is themarketsniper.com. 4 names for you as a parting gift as I sign off. GameStop, Sense, Overstock, BlackBerry. Yes, that old phone maker. So I'll flash the image just for super quick moments that you can all take a snapshot of it. These are for the equity guys going to be very, very interesting. We like that structure. You might see a mini USD Korean won in that. Overstock has already begun breaking, but you might get a little bit of a pullback. We see over 160 for that. Sense, a bit of a sort of Robin Hood stock taste to it. It's a bit like Palantir and Yeah, meme stock.
Yeah.
But also the potential's there and the money's to be made, and you've got real money management. Go and take it. Final one, that's platinum alert, by the way, which is my actually my favorite metal at the moment, because you can put more money into it and have less space. So watch platinum. GameStop. There's something with this metaverse and Facebook. A gentleman by the name of Cohen went in there. I think this whole new world virtuality that to you and me, Dale, might feel like grandkids stories, not for us. Something with that. Watch GameStop. I'm seeing a huge 664. This could be a Tesla story in the gaming space. Watch the metaverse, virtual reality, everything that goes. It's on track. It's on theme. This guy's repositioning the stuff. The technical structure is here. It's an insane risk reward. That's it. I hope that was valuable. That's what I aim to do for my premium community.
I feel like I'm in an alternate reality.
We all are. That's right. Pass the Prozac, please, and a beer to wash it down with. Indeed.
Thank you, my trading warrior brother. Really appreciate it. Great as usual, even better than the last one. So Francis Hunt, everyone. Some great. Wow. What great analysis on roids. Okay, right, Francis. Thank you very much, guys. You could hope you enjoyed it. You know, it's on video. You may want to watch it again. And you could join the team in 13 minutes for the morning edge. See everyone for Turnaround Tuesday. And don't just count your pips on Euro Swiss and the Korean won. Count your blessings. Adios. See you tomorrow. You're very welcome. You're welcome, Gorka, Monica, Forex Gal, Alexander. All right, guys. See you later. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.